Well, back in June, Skybridge, which is a U.S. hedge fund, forecasted that gold will surge to fresh highs in the next year. But investors seeking currency alternatives as global debt balloons should look to Bitcoin. The two are frequently compared by investors. So today on The Alternative Investor, we discuss the appetite for investors, getting exposure to Bitcoin and gold in an investment portfolio. And to do that, we're joined by Peter Little, who is a fund manager at Anchor Capital. Peter, thank you so much for your time. So the performance of gold and Bitcoin has been very interesting lately, but I'm curious, let's start off with, have you seen your investors, asking more questions about how they can get more exposure to Bitcoin and gold?
Hi, yeah, thanks for having me today. So certainly, well, I guess Bitcoin and gold slightly differently. So gold last year, when we saw a lot of concerns around whether the central banks were doing the right thing and what impact that would have on the stability of currencies and how the pandemic was going to play out. There certainly was a lot of demand for gold or sort of interest in gold. And then Bitcoin, I would say probably towards the end of last year and into this year, we've seen a lot more interest, obviously just because the price has gone up so dramatically, and a lot of clients are wondering if they're missing out on a huge opportunity.
So what are you telling clients? I mean, some may say that when it comes to Bitcoin, it's a case of tread carefully. What are you saying?
Yeah, so I guess just for full disclosure, my bias is to put these two assets both into the sort of too hard to value camp. And the primary reason for that is we traditionally work with assets that produce some income, so stocks. Companies have earnings, real estate has rental income, bonds give off coupons, and all of those incomes allow us to create sort of find some value for those assets or anchor the value of those assets against what cash flows they might deliver to us in the future. And in this case, both gold and Bitcoin, neither of them deliver an income. So you're sort of relying on somebody buying the asset from you at some point in the future, and it's purely a supply and demand equation, which is much harder to evaluate from a fundamental perspective. So, yeah, we tell investors that Bitcoin is not something that we don't think investors will make money out of. We just can't figure out what the right price to pay for it is, and it's kind of a similar argument with gold.
So let's explore gold a little bit. I mean, the inflation argument when it relates to gold, does that still stand right now?
So the inflation argument for gold, if we look at gold in dollars against inflation in dollars, the argument's never really been that compelling. I think if you take it over sort of 100 or 200 years, yeah, maybe, but certainly over shorter periods of time, which is, I feel like, the period that most investors are concerned about. There's no strong evidence that they're particularly closely correlated. So, for example, in the 80s, you saw pretty high dollar inflation. You had inflation in the teens, and the price of gold halved during the 80s. And then you had sort of the first decade of this century where we saw inflation in dollars was reasonably subdued, but the price of gold tripled. So there's not a strong connection, certainly in dollar price of gold and dollar inflation over most meaningful periods. I think for South African investors, slightly different story. If you're thinking about the price of gold in rands and inflation in rands, I think because gold is a dollar-priced asset and the local currency has a big impact on inflation, I think potentially it can protect you a little bit against rand inflation. But I think there's other ways of doing that also.
So when it comes to the question of how much gold one should hold in their portfolio, is there a right or wrong answer, or does it depend on how much risk appetite you have?
So I think my perspective is that most investors who want to own gold want to own it from a sort of security perspective, almost an insurance against catastrophe. And for me, I generally think about something that's going to give you insurance as a cost rather than an investment. So, you can hold a portion of your investment in gold if you're worried that there's a catastrophic outcome and stocks and bonds and things or currencies are going to completely implode, I think the gold will leave you with a good store of value in that situation. But because it's not producing any income and there's a cost associated with storing it and insuring it and holding it, I think it's generally gonna weigh on the performance. So I think the question for me and how much money you want to put in gold is generally how much are you willing to pay for insurance.
All right. Before I let you go, what is that one question about Bitcoin that you still haven't been able to get an answer for? Like, what's that one question that still plays in your head?
The one question that, for us, unquestionably, there's going to be more demand for these crypto type currencies. I think people are getting more used to them. They have probably a role to play. For me, the main question is, how will regulators deal with them? Because ultimately, if regulators are concerned about people using these to circumvent sort of tax and exchange control regulations, and they bring in regulations to prevent that, then remember I said this is an asset that requires demand and supply. So if regulators can wipe out the demand for these assets by putting in regulations, that's probably the one thing that's probably still up in the air for us.
All right. Peter, thank you so much for your time this afternoon. That is Peter Little, who is a fund manager at Anchor Capital. I'll be back at the top of the hour with more news. We have your weather details up next.
Thanks.